raising capital is the other thing that you're now reminding me of that you obviously have more experience in than most out there. But have you had a failed attempt at it though, where you set out to raise a certain amount of money but couldn't get it or couldn't get as much as you wanted, or other challenges that happened in raising capital? Because I think that's another misconception that maybe investors don't understand how hard it is to raise capital.
Yeah, I think it's timing, and it's really difficult and interesting because at certain moments in time, capital is available, and then most of the time it's not. Maybe 80% of the time it's difficult and not, and maybe 20% of the time it's available, or maybe less. There are little moments of time, and it's interesting because some of the things as corporations do act and take the capital when it's available, and if they do, the investors see that it may not be the right ideal timing for the corporation. So, yeah, I found it challenging. Not with Riverside. Riverside has always had capital. We've been lucky. We were most lucky in the 2008 financial crisis that we had done a financing, and Lucas Lundin, Rick Rule, Eric Sprott, and others had all financed us at a very nice valuation when we came out of the gate, and we're doing very well, and that I had appreciated capital right from the beginning. I really think Almaden's chairman, Dwayne Poliquin, and other people who kind of taught me, your only friend's your bank account, to make sure you take care of it. And immediately, when we listed, we began to prune expenses. Even when it was a high time, we really started to restructure all the different contracts and everything, and have always really valued the capital we have in the bank, and having over $5 million in the bank right now, and having not had to do a financing in almost 5 years. Really, since 2019 was the last time we did a true financing into the company, and things like that was always very important. I think that's different than the sector in general. I think the sector is very capital intensive, and the job is to raise money and deploy money. And I actually have tried to teach our job is to make money. So where our job is to make money as a business, to make money as a company, and to run the business called mineral exploration. But our job's not necessarily to spend money. Ours is to make money, and we have to spend some money in order to make more money. But we don't spend money just on our balance sheet to make discoveries. We try to have other people spend the money to make the discoveries, and we have an interest in those. We always have a royalty in those, but it just is too expensive to spend the money to try to make the discoveries. The numbers just don't work. And so with our balance sheet and what we have, we try to use that to own assets. I think that's very different than other people that looking at the business maybe, who are in the analysts and the bankers and things that really see that they want to see the money, raised and spent. And that's good. It gets done and spent. But on the other hand, then you only have the upside. You have to at least recover the money you spent. Plus, if you can take money that you get and buy assets, then you have something that you can have on your balance sheet. And now asset would be something that's going to make you money. So it's going to make you money. So how is that property going to make you money? Really comes to structuring the deal right from the beginning. So one of the key aspects I look at when looking at a project is, how much is it going to cost for me to get it? How much is it going to cost for me to keep it? How much is it going to cost for me to invest in order to get someone else to take it, move it ahead without me having to spend the money? Those are three very fundamental questions about a project that I look at.